Hi, I'm David Piana, and I want to talk to you a little bit about the implications of the new tax law that went into effect January 1st, 2018, for your nonprofit and for you. Just a caveat here at the outset, I'm not an attorney and I'm not a CPA, so any specific actions you may want to take as a result of changes in the tax law, you should check out with your professional advisors. The nonprofit environment is obviously changing with this tax law. Tax reform, as it's called, will be reducing charitable giving by billions annually. This is not the intention that was sold to the public, but it is one of the impacts. They're repealing the individual mandate for health insurance, which will price 13 million Americans out of healthcare. And the budget will add trillions to the deficit over the next decade. And of course, all of this will set us up for entitlement reform, which is the agenda that will target the poor by reducing expenditures on social programs. Communities are going to be caught in the middle. Deficit's going to go up maybe $7 trillion, and there'll be, by some estimates, a $20 billion drop in charitable giving. And this is where you come in, someone involved in a nonprofit. There's the increase in the standard deduction, which is a good thing for a lot of people, and most people do not itemize currently, and even fewer will itemize starting in 2018. But the result will be less motivation to make charitable gifts, at least for people in the middle income areas. Wealthy people will still have the motivation because they'll be able to clear the hurdle for the standard deduction. There's also the doubling of the state tax deduction, which should reduce by 7 billion gifts that are made through estates. And there are some other technical changes that will affect people who are subject to UBIT, unrelated business income tax. There's also a particularly nasty and unnecessary little feature of this law, which would tax employee fringe benefits like transportation allowances that some nonprofits provide to encourage people to get out of their cars. And since nonprofits don't pay tax, they came up with a 21% tax on these fringe benefits. There will also be an excise tax of 21% on any employee compensation in excess of $1 million. The sum total of all this will result, by some estimates, in a loss of 250,000 jobs in the nonprofit sector. Now, at the same time that the wealthy will be benefiting greatly from the tax benefit, from the tax reform program, Trump's budget projects $7 trillion in deficits over 10 years, while at the same time cutting almost $2 trillion from safety net programs like Medicaid, Medicare, food stamps. These days, almost 40% of our households in this country have no net worth, while about 5% hold half of all the wealth. That is only going to get worse. And of course, disparities by race are persistent and huge. The new tax law and the proposed budget are going to exacerbate these existing inequalities, and some might say that's the whole point. So we're borrowing from our future. The deficits today will inevitably lead to budget cuts tomorrow. Don't be surprised when you hear Congress railing against deficits, which they just created and made worse, and that their resolution to that is to try to attack Social Security, Medicare, Medicaid, SNAP, which is food stamps, and anything else benefiting regular people. So what can you do as this gloomy scenario unfolds during this year? First off, if you're dependent on charitable deductions, like most nonprofits, for your income, you should examine and stress test your business model to see what you will be impacted by and to what extent. If you're someone who contracts with the government, local government may have less money, particularly in states that were high tax states and are subject to the state and local tax limitation. So you'll need to look at your revenue model. You'll also need to think about changes you can make now to strengthen your position, because some of these impacts may not hit for another year. Plan out different scenarios, think about the future, and as always, you'll be as prepared as possible in an unfavorable environment for your organization. Thanks so much for listening.